Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and let's begin with the news events of the day. And the big one is the ECB is meeting today, and we'll get some clarity on whether or not they will begin to remove accommodation in June, July. Now, last month, that's what was implied. Now, the problem is, and the reason why you've seen it rally in the dollar and weakness in the euro which actually broke down yesterday, was because last week, source reports, always be careful, you know, those are the nameless, faceless sources that the media uses to reference their fake news, and in this case, quite possibly could have orchestrated a massive short squeeze of the US dollar. Those sources said the most pertinent source reports came last week, with the ECB said to see scope to wait until July rather than June, July, to signal an end to its asset purchase program. So we'll put a dark cloud over the removal of accommodation. In the end, folks, all you need to do is watch the euro. 4-hour chart, you could see that it's very weak. Earlier in the month, it was very strong. We remain in the trading range. We have lower highs and lower lows, with the dollar making a new daily high today. It's since pulled back off of that high, but a new high nonetheless. So it appears as though the markets are prepared for a dovish meeting today. So watch the currency markets. In the end, no matter what the talking heads on CNBC say, the ECB said, it's actually the currency markets that will dictate what they actually said. Let's get to the U.S. averages. S&P 500 this morning is down 1.75. Not a big move, pretty much unch. We continue to trade in a downward sloping handle. Remember yesterday I said we had, or the day before, we had a cup with handle formation. I think that is still intact, and we could quite possibly rally out of it. The NASDAQ continues to consolidate. We are up this morning on the heels of Facebook, which is up strong this morning after announcing strong earnings. The question is this: with the threat of regulation coming down on Facebook and the rest of the technology sector, will Facebook sell off later on today, as has been the case with many of the companies that have announced strong earnings? So I would be careful here. Let's take a look at gold. Gold continues to remain weak. We were in a consolidation yesterday. We broke down below the lower band of support yesterday morning. We attempted a rally overnight. That rally failed, and we have since pulled back. So the question then becomes, do we take out yesterday's lows, or do we put in a higher low and finally rally back? Again, the fate of gold in the short term anyway remains with the strength of the U.S. dollar. If the U.S. dollar remains strong, you could bet your bottom dollar that absent a geopolitical event, gold will remain weak. The same holds true to a slightly lesser extent for silver. Silver this morning is down as well. So the metals are weak. Let's take a look at crude oil, which rebounded yesterday. We'll look at the Brent price. We're consolidating here, but there is a threat of a head and shoulders set up on this 4-hour chart. Left shoulder, head, right shoulder. Here's your neckline, 45-degree neckline. But if we rally, which it appears we're already beginning to do, rally out of this wedge formation, it appears as though we are moving higher on oil. Now, a rising U.S. dollar hasn't really hurt oil, but it's probably held it back a bit. So if the dollar corrects and the euro rallies, you can expect oil to rally very strong. So watch out for the commodities complex today. It's been under a lot of pressure due to the rallying U.S. dollar, which I believe to be a short squeeze and quite possibly orchestrated. But the good news is we'll know today. Now let's take a look at some members' stock chart requests. This is where members submit symbols for me to review on video. Let's kick things off with Blue Apron Holdings, not the best of IPOs, but a typical Wall Street issuance near or at the top of a market cycle. So it went public back in June of 2017, And here we are today. We became oversold. This is a weekly chart, if I didn't say so. We became oversold relative to the 2 and quite possibly the 3 standard deviation Bollinger Bands. And we have since drifted downward. And now we find ourselves drifting higher within a wedge formation. Now, the path of least resistance, the primary trend is obviously to the downside. We have clear and defined lower highs and lower lows. This is not an investment until we get a breakout above this upper band of resistance and quite possibly a pullback and a retest of prior lows. That would be the best risk-reward entry point from a longer-term perspective. So on a weekly basis and from a longer-term swing trade perspective, I would avoid here. Now, shorter term, daily chart, we're seeing a bit of strength. We have a cup with handle formation. RSI has, in fact, broken out. Stokes are beginning to hook up. They are above the 50 level. Good stuff. Cup, handle formation. We have a pivot point at 2.15 on price. So if we get a rally out and above this upper band of resistance, you could scratch the itch, open up a position. Even if you wanted to open up a position now, keep it small with a stop right below 1.89. Because if we break down below 1.89, in all probability, we're taking out recent lows. I would add to the position if we get a breakout and then add more on a rally up and through, and especially a close above 2.15. I don't believe that this is going to be a long-lasting rally. I'm not sure how many shorts are in this name. My guess, a bunch. So take advantage of the short squeeze opportunity. And I would sell into resistance, quite possibly at 2.95. Volume has been light. So there's a bull case to be made here. Short term, longer term, the path of least resistance remains downward. Microsoft, weekly chart. This is not a buy, it is not a short. RSI, we're putting in lower highs and lower lows. Same deal here on Stokes. Price is not confirming that, but we have our indicators which are confirming weakness. All we need now is a break below this lower band of support, or to negate these indicators, we need a rally and a close above 97.24. Volume to the upside for the past couple of weeks has been light. Let's go to a daily chart. All right, so on a daily basis, we broke out here. On April the 12th, we've since rallied. We pulled back. We retested the breakout point, and we've held. Yesterday, we rallied well off the lows of the day. I would allow the shares to settle down here, perhaps retest once again, and I would watch out for earnings. And, of course, watch out for interest rates, which closed with a 3 handle yesterday for the first time in years. Now, the 10-year yield is pulling back some this morning, so that may give a lift to a number of the tech names. Volume for the past couple of days under distribution, but yesterday we did see some buyers move in, influencing this volume bar. So the chart on a daily basis looks okay. One concern I have here is that we did put in a lower high. We did not break out to new higher highs. So watch out here for earnings, and let's make sure that we hold the support level. Perhaps another retest would be good. Twitter, weekly chart, strong earnings, horrible price performance. It's consistent with a number of other names out there. So for the week, we're down nearly 7% on volume. That's a concern. That's the market sending signals. Now, the week isn't over yet. We could rally back by Friday afternoon, and for all I know, we'll be up above the 2018 highs. So the jury's out. Let's check out a daily chart. All right, so here's our triangle formation. We're holding the lower band of support. This is not a pretty chart. We have lower highs and we're threatening lower lows. We did see buyers bid the shares back up off the lows of the day yesterday and the day prior. Yesterday's volume was very strong, but we did have the volume bar influenced by some buyers. So we'll keep an open mind here. So I would watch for a close above this upper band of resistance before I bought. I would short on a break to new daily lows and the close down below this lower band of support. I would not be an aggressive shorter because you do have support down below. Now, if we break 26, then 24, then it's all over for Twitter. It's going a lot lower. The biotechs. Let's begin with a monthly chart here. Now, on a monthly basis, we are trading down below the lower band of support, and we do have a lower high. So, is this a setup here for a rollover on the BIB? The month isn't over yet, so we don't know. We could quite possibly rally back and close above this upper band of resistance. So we need to keep an open mind. Weekly chart, a very sloppy weekly chart, but for the most part, let's update this. Let's take our prior triangle formation and extrapolate that out. It's funny how this works. Amazing. So what was a prior upper band of resistance back here is now acting as support. It did so back in March. So I don't see a compelling reason to go adding these shares to your long-term portfolio right now. There's too much risk. Down volume has been dropping off, but also up volume as well. Now, shorter term, taking a look at a daily chart, the chart looks compelling to the long side. And I'll give you my reasons why. 1, a very tight consolidation on RSI. 2, we are within a triangle formation. And yesterday, we bounced off of the lower band of the triangle formation, which happened to coincide with support at $50 per share. And we also flashed a doji star formation. In candlestick charting, a doji star formation is a sign of indecision and an indication that we may see a trend reversal in the coming day and days. So, the current trend is down. Therefore, this doji implies that we should see a rally higher. Now, does it break out above resistance? That's the million-dollar question. We don't know that yet. So, for a short-term swing trade, I would look to put on the trade with a stop right below $50 per share and see if the shares could rally up to $54, then $56 per share. I would book profits into $56 per share and then watch it. Is it able to close above $56 per share? If it is, then it will probably rally up to $59. If we close above $59, in all probability, we will challenge the recent highs on the BIB. So that's my story. I'm sticking to it. If you have any questions, leave me a comment. If you watch this on YouTube, follow me there. Leave a comment. Click that bell. Get notified of future videos. Subscribe to my channel. Everybody have a profitable trading day. Be well.